numbers. We spoke with the management as well. So let's get in our special Insight Edge segment with Nigel telling us the insight that he got from the conversation with the management.
Well, that's right. A couple of pieces of news playing out on HEG. First of all, the numbers were rather weak. If you look at it on the top line, there was a degrowth of close to 11%. EBITDA got hit far harder, and that meant that margins came down to single digits. And this is the lowest margins we've seen in the last 3 years or so. The power and fuel cost, in spite of seeing a decline on the top line, the power and fuel cost was constant, telling you that that's the problem pocket for them. And the net profit number as well took a clonk. So that's the first part of the news, that the results were rather disappointing. The second part was they announced a scheme of arrangement. What was that? They announced that now in the time to come, you'll have two listed entities. One will be HEG Graphite and the other one will be HEG Green Tech. Keep in mind that this Green Tech entity, that's the one that will house the manufacturing of graphite anodes for the lithium cells. As of now, there's no revenue coming out of there, but that could be a driver going ahead. So that's why, they're saying that they're going to be rooming this business. As of now, 95% of their money comes in from graphite electrodes. So that's bulk of their business. How does the holding shape up post this scheme of arrangement? The promoters, they seem to be more bullish on the green tech business because they're doing a merger of, one entity into them, a couple of entities actually. And that's why their share goes up to around 70%. While in the current business, well, it stays at around 56%. That's the graphite electrode business. Now, we spoke to the management earlier today, and a few important highlights that they gave us. They're saying that the green tech business, they believe that could be a 1,000 crore EBITDA number in the next 3 years or so. We'll have to hold them on that number, but that's what they believe. On HEG graphite business, well, they gave us some important points. They said, yes, the margins were disappointing, but be ready for 2 more quarters of pain. The recovery will only be there in the second half of the year. And in volumes, they're talking about 75% capacity utilization on a capacity of around 1 lakh tons odd, which tells you that they'll be doing around 75,000 tons. And finally, they said that the cash balance as of now is around 1,000 crores. But 700 crores out of that will be used by HEG Green Tech. So put all this together, the numbers are a little disappointing. The path ahead, they believe that HEG Green Tech can deliver good numbers. But for the time being, the stock's under pressure. In fact, let's listen in to what the management had to tell us.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
When the capacity utilization will go till 75%, the EBITDA will be approximately 350 crores from that. So you can expect they could be 1,000 crores of EBITDA coming from this green tech company in next 2-3 years. We are sitting with 1,000 crore of cash, of which roughly 700 crores will be utilized for this TACC business.
The stock has taken it on the chin today, has HEG 9% lower now as we speak. Time for a short break here on Halftime Report. Up